Nobody anticipated the silent change that started deep within the American banking sector. Traditional banks have avoided cryptocurrencies for years, particularly XRP, the digital asset at the heart of one of the most well-known legal disputes in financial history. However, the story has now taken an unexpected turn. Rumors have started to circulate from within one of the largest banks in the country, claiming that Chase, Wells Fargo, or possibly both, have started testing XRP-backed loans and XRP savings accounts for a select group of customers in secret. Furthermore, insiders say that this action is a declaration of war against the SEC rather than only an experiment. The banks have finished waiting, and the message is obvious. They are placing a wager that XRP will remain in the market for some time to come, and are getting ready for a time when it will serve as the cornerstone of the contemporary financial system rather than merely an investment. An internal memo that was shared among senior officials at one of the so-called Big Four US banks is where the tale started. Yes, the memo described an experimental project codenamed Project Atlas. It explained this revolutionary lending system that genuinely uses XRP as security for commercial and retail loans. On paper, it appears to be a typical modernization endeavor, automating loan processes, boosting risk management, and increasing liquidity efficiency. However, upon more investigation, experts discovered that the project's central engine was especially designed around the XRP ledger, rather than being a generic blockchain technology. Well, the ramifications are astounding. Banks have been operating under centralized control for decades, making loans using the fractional reserve model, government bonds, and fiat reserves. However, they are now essentially announcing their independence from that system by using XRP, a decentralized digital asset, to support loans, and the timing is perfectly calculated. The long-running lawsuit brought by the SEC against Ripple is coming to an end. The banks are immediately stepping in and taking advantage of the momentum created by the court's decision that XRP is not a security in secondary markets before the dust has even settled. There is a silent uprising taking place within these institutions, a conflict between the innovation teams who recognize the signs and the compliance department that is still adhering to SEC guidelines. In order to create liquidity corridors that would enable XRP to be used as collateral for loans and to fund new yield-bearing accounts that outperform traditional savings interest rates, top executives from at least two significant US banks reportedly met privately with Ripple's institutional team earlier this year, according to insiders. We'll proceed without the SEC if they don't provide us with clarification, according to one banker. Let's examine the true implications of XRP-backed loans for regular people. Imagine, entering the Chase location in your area. You can deposit your XRP and instantaneously borrow money against it without having to liquidate your assets, as opposed to pledging your vehicle or mortgage. By using automated smart contracts on the XRP ledger, the bank manages the risk and guarantees collateralization and immediate settlement. You maintain your cryptocurrency, the bank offers liquidity, and there are no middlemen or administrative delays. Furthermore, according to reports, the test program also incorporates a savings account product that pays depositors in a hybrid system that combines XRP yield with USD. As you are aware, customers have the option to devote a portion of their savings to XRP liquidity pools, which yield returns that are noticeably better than those of traditional savings accounts. According to preliminary test results, returns might range from 6% to 9% per year, which is significantly more than anything provided by traditional banks. Behind the scenes, it seems that the bank's choice to proceed stems from both necessity and inventiveness. Pressures on the legacy financial system include growing debt, decreasing liquidity, and, to be honest, a decline in public confidence in centralized authorities. The system's vulnerability has been made clear by the 2020s. Digital alternatives like XRP have become faster, less expensive, and more durable every year. Given the long-standing relationship between the SEC and the banks, which has seen both organizations go above and beyond to adhere to regulatory frameworks, frequently serving as enforcers of the status quo, this development is especially startling. They're changing the script this time, though. They are effectively challenging the SEC to stop them by publicly incorporating XRP into their loan and savings programs. Employees started to feel both excited and terrified as knowledge of this leaked within. While some viewed it as the start of a new era, others regarded it as a betrayal of regulatory compliance. The fact that all of this is taking place so quietly is really intriguing. At least not yet, there aren't any ostentatious news releases or public declarations. However, a chain reaction will occur throughout the industry if they turn the switch and make these products accessible to the general public. All other banks will have to do the same or face going out of business. The wider ramifications are nearly unthinkable. Banks instantly legitimize XRP once they start to offer savings accounts and loans. It is incorporated into the mainstream economy as a financial tool, rather than a speculative token. The SEC, however, is in a difficult position as the very organizations it aimed to defend are refusing to recognize its authority, further undermining its reputation, which has already been damaged by legal setbacks. Ripple is standing in the middle of this tempest, silently observing the development of its vision. The organization has been constructing the necessary infrastructure for years, including automated compliance systems, real-time settlement tools, and institutional-grade liquidity hubs. One thing is certain: the revolution has already started as the pilot programs increase and the leaks become more noticeable. Banks are becoming the largest supporters of cryptocurrency, not its adversaries. Crypto will cease to be an outside technology, and in all honesty become the lifeblood of the global financial system when the public rollout starts, and anyone can just go into a bank and take out a loan secured by XRP. The banks have picked a side, and that side is, well, not the SEC's. They have picked XRP, and by doing so they have picked the future. Please keep in mind that I do not hold a financial advisor license. These videos' content is solely intended for viewing enjoyment. Before making any financial decisions, I always advise viewers to do their own research and speak with experts. Many thanks for listening. Please remember to hit the subscribe button and give the video a thumbs up if you liked it. Additionally, to be the first to know when I post new stuff, make sure you enable the alerts. I can't wait to see you again in the next video. Be careful.